Alrighty, it is TGIM. Thank goodness it's Monday. Without a Friday, you can't have a Monday. Life just functions like that, one step after the other. All right, it's Doc from North America. Good morning, good afternoon, and good evening. So let's see what's going on here. What do we got screen shared into now? We're looking at the New Zealand against the dollar. Let's see what the Swiss is. I was thinking about the action that I'm seeing in the Swiss. In some ways, I think of it as like flight to safety. And then I look at the euro and the cable and I realize, well, now the dollar is being sold down. We're always hoping for it to become much more passive. And it's not the place to go to when the world is coming to calamity, when people think it's coming to calamity or it's in calamity, or I don't know, one of the above or all the above or none of the above. I guess that's the only way to look at that. But in the end result, that's what we're seeing this morning. A little strength there, trying to turn up. I wouldn't call that really strength. You got a red dot. Can you see it all? I guess you can. You got a red dot. Oh, let me go check the chat line too. Let me see. There we go. Let me go to the chat line. There it is. Intraday live trading with Doc. All right. We click the DocDow and I see Celeste. I haven't seen you in a while. What are you on holiday? I am peachy, just kind of marching along, let's put it this way, the world's financial system has me totally aghast. I am totally fed up with the way they're doing things, but it's why I'm here at Dukascopy for the last 9 years, and that is to complain about it and try to bring some reality to reality. At this point in time, I know everybody's watching the second quarter numbers and they're looking at Mr. Powell, and there should be some strength more. At the same time, we wake up this morning, we find the Dow Jones Industrial Average down like 100 and some odd points. We find the NASDAQ 100 up about 25, 35 points. That flows to the the interest rate market, and then we see the S&P 500. Let's see, let me just throw it up there real quick for you. So, where are you? Just a good flavor of what's going on. And where's that at? And that's not it. That's not it. Let's see, let's go find it. Maybe that's it right there. There we go. And so, let's see, and we go like this, and you can see the charts here. You can see the Dow Jones Industrial Average is down 137, 136 points right there. You've got the NASDAQ up 55 points, almost 56 points now. And you've got the S&P 500 down 5 points. So, you have these cross currents, and then these are shorter term intradays that I follow. In other words, it breaks the zero line and goes down in value, and it breaks the zero line here on the upside, and it goes up in value, and the classic doc work. Apologize for the late reply to your email. Whenever you are free, you may please reply I will go back and check that. I will. That's no problem at all. We just kind of march along here. It's I know that there are people all over the planet, communicating, and then sometimes you actually have real lives that you have to deal with, and so no, we're never afraid to respond, even if it's 2 or 3 or 4 months later. It's no problem at all. It just is what it is. That's the way trading is, and that's why I always say there are no stupid questions, there are no dumb questions, there are no foolish questions in trading when you're dealing with money. There are only long answers or short answers. That's all that it comes down to. Ask anything. Moses, how you doing? Alan, how you doing? Alan Tommy, I like that. I like that name, Alan Tommy. I hope everybody's doing fine. TGIM, thank goodness it's Monday, which means we've survived the 2-day holiday, or the 2-day weekend. That's why I always say thank goodness for Monday and thank goodness for Friday. We're looking forward to it when it comes, and we enjoy the idea as it passes on. All right, so let's see. Welcome to live chat. Remember to guard your privacy. I never read that. I just see it as something from YouTube. I never really read that before. Would you believe that? Okay, I don't want to learn more. No. All right, I just see that up on the chat line. So anyway, I will respond again. I'm trying to remember what the topic was. I know I parked the email. Do me a favor, just send send us another email of it. Just send your last email that you want an answer to, and we'll take a look at it, and I'll send it right back to you. That's no problem at all. I think I was waiting for you to respond back to something. I think that's how it played out. So, all right. So you can see here the markets are mixed. And just for interest's sake, I would have to believe right now. Let's see if we can move this into a better position. Why is that staying up there? Why are you doing that? Okay, let's do this. Let's take a look at the interest rate market, see what's going on there. Chances are interest rates must be dropping again. There's the 10-year. Yeah, see, so there it is. It's moving up. It went into the sell on Friday, and it's trying to turn up. But at the same time, it stayed in the weekly buy. So, we knew that the sell was not something you were going to take too serious. Let's take a look at the 10-year. 10-year went down to like 124 on Wednesday of last week. Can you imagine that? 124. And it just it keeps on zooming all over the place. We watch the 30-year more nowadays. That didn't even go into the sell on Friday. Look at that. They're not even willing to sell that. So there was some sensibility in the long-term position of almost 2%. I think it's trading at like 1.91 or something like that. So, unless that's no problem. Yeah, I think I sent a question back, and I was just waiting for that. That's usually how I work, because I always answer. I'll always answer. There's no problem there. And so I think you might have responded back and said you had to get back to me on whatever it was, and that was it. So let me see. Let me just take care of this. Yes, sir. The world says hi. Say hello to the world. Yeah. Catch you in a little bit. Bye-bye. All right. So that's where we're at the moment. All right. So more than likely, the interest rates are, being pushed up. We know that much. Or no, I'm sorry. Interest rates are being pushed down. The price of the bond is being pushed up, which is as Giannis would say, is trading illogical. Like I would say, it is trading illogical, and any good Swiss banker would be saying the same thing. It's illogical. The dollar's going down, and the interest rates were going up. Okay, that's crazy. So I replied, but it was with a month delay. I'm sorry. Oh, okay, I didn't realize that. All right, let me see if Robin has it, and we'll go chase after it. We'll do that. So, and if not, we'll send you an email again, and then you can respond to that. So that's no problem. But always glad to help. Let's see, where am I at here? There's the chat line. So no problem, Alessa. We'll figure it out. We'll get whatever question it is. We'll get it resolved. Like I said, between Robin and I, with 90 some odd years in this marketplace, Robin says we're almost 100 years. I hate saying that. That sounds too scary. But anyway, if we don't know the answer, we can point you in the right direction to find the answer. That's usually where we're at on everything. I think it was, let me go back and think for a second. It was that's right. You were in Cayman, maybe? Now it's coming back. You were in Cayman, right? And you were, and it was a clearing question. I think that's what it was. And at the same time, it was a trading question. Because, I know, it was black pools. That's it. It's all coming back now. See, Doc you have to just stir Doc's mind a little bit. It all comes back in his head. Yeah, it was about black pools and so forth, and being able to follow your trades going into the black pools. Yeah, Alan, I think the Goldman put out an article yesterday about that. I think that's what that was. They were saying that there should be a little bit more strength in the market because of the earnings are going to look really, really good because the society was reopened, and so there was some really good numbers. So what's going to happen is that, but remember, they sell on good news, so there's a good chance that within the next 5 or 6 trading days, whatever they do about taking this market up, they may try to take some profits from it, going into next week. And since Powell is talking and the second quarter is going to be discussed, the numbers got to look great. I mean, they just got to look great. You do assume they would look great. That's a it just has to, just because of, its percentage, quarter over quarter. So you got to figure like the first quarter was dragging because the society was closed down, and the third quarter was dragging, and so then it starts to perk up. So it looks good on the first quarter looks firm because the third quarter and the fourth quarter of last year was weak, and then you got to assume that there's got to be at least one more good quarter coming out of it before it stabilizes or flattens out. So yeah, our earnings start to kick out. I guess it's this week. So that Goldman put out an article yesterday. I saw that for a short period of time on Sunday. That I didn't read it, but I saw the headlines to it, and I just thought, QE stuff, and who wants to trust Goldman? That's another thing too. Most of us old Wall Streeters don't like trusting Goldman, because if they say buy, it means sell. If they tell you to sell, it means to be neutral. And if they tell you to sell, or was it? If they tell you to be neutral, they might want you to buy. I mean, you never know with them. They're always front running something. Especially now that they're a bank and not a brokerage house anymore. So, they have the doorway to the overnight window. Something they never had for, ever and ever. Now they have control of they have the overnight window, and they're a bank. Like JPM is a bank now. Well, JPM was a bank. It was a private bank. So I'm not gonna drift into that. But yes, I hear you. Anyway, let's take a look at the markets again. Let's go over to the currencies, unless someone wants to see anything particular here. And so we see here that the dollar is probably relatively flat after the last couple of days. Right there, you can see it's just firm. Let's see what it looks like on J4X. Right there. Oh, where's my fact check spreadsheet too? There's a fact check spreadsheet also. Okay. And so you can see here the excuse me. I don't know why that cough came. Sipping my coffee, I guess. You can see here on J4X, you can see the pressure is on. See right there, you can see that. You can see the white line breaking the dashed, gold line there. And at the same time, you can see the Hinky-Ashi bars are moving down for the last 3 days. So there's some pressure there. And it just, the Hinky-Ashis will straighten out over the next 4 hours if it stays right here. It'll start to turn positive or green or something like that. Let's see, what else we got going on? Okay, I've answered all that stuff, exactly, okay. I look over there and I'm ready to answer it again. Tells you how pure it comes out of me. In other words, I see something, I just tell you what I'm thinking. And when I see it again and for a few seconds I forgot, I kind of drift there. And I'm ready to answer it again. I do have a question placing my trades on Dukascopy with multi-charts. I have not linked my multi-chart to the Dukascopy because of the broker issues. So I'm not sure, but I can't take positions on both sides of the market. I think that's a clearinghouse thing. That would be, because that would be market making, and even like IB and so forth, they don't like you doing that either. A lot of brokerage houses won't allow you to do that unless you register as a market maker, and then you have to do it through the NASDAQ or the New York, or I guess ICE or something like that. But none of the brokerage houses are going to give you that much room to make markets inside their markets. Remember, because they have to fill your order, right? And so they don't need you lowering the offer to fill the offer. So in other words, they want to raise the offer so that they can execute your order and cover it at the same time and try to make commission. And so, you have to belong. You have to have a BD, or you have to belong to a clearinghouse that's going to let you market make. And that's a whole different game there. And so they don't want you market making on them, because they're trying to facilitate public orders. That's hence the word public orders. That's what. And I'm sure if you talk to Dukascopy, they probably have something that maybe they push you over to Swiss Bank or something like that, if you want to make markets. But that's what you're talking about now, unless you're talking about making markets. It reminds me of a story. I'm not going to get too deep into it, but it reminds me of a story. I had this physicist come to me once, and said, my son and I have been looking at this. What do you think? And I said, yeah, okay, let's look at it, because they know that I know physics and I know markets. And I said, no. I said, why? It looks like a guarantee. I said, yeah, but you're making markets off of the brokerage house. Their job is to facilitate the public. Their job is not, and if they're making markets, they're going to make markets. They're not going to sell something they just bought cheaper than the offer in the marketplace. He goes, why not? It's because they're making markets. Well, I want to make markets. Well, then you have to do a different type of registration. You have to talk to that brokerage house and see if they have an opportunity for you to tie in, become a partner or involved in some way. And so, yeah, you can't make markets on top of a public brokerage house. The idea is they're supposed to facilitate trades for the public. So you might find correlations, but you're trying to lean against the brokerage house, and that makes it hard for them to make public markets at the same time. Yeah, you become a market maker. So what you do is you become a market maker. So there's a whole different classification for a market maker. It's less margin for you. It's a whole different classification. You're more responsible on certain levels too at the same time. And if you try to make markets using the public, then you're hurting the public. It's bad enough the public is paying a higher. It's not bad. It's just that they're paying a higher margin, and the brokerage house is liable in the end result. And so if you're making markets, you're acting like a professional, and so that means you need to be in a different classification and a different access to the markets overall. Does that make any sense to you? I see what you're saying, Alan, but you can't make markets on a public system. They're trying to execute orders for the public that are trying to get the best price. Having a hedge position, euro, and long on a price and short on a price is allowed as retail trader. Yeah, that's right. But are you trying to step inside their markets at the same time? If you tighten up their markets, they can't cover for their clients. So in other words, imagine if it's like 3 pips higher, okay, or 2 pips higher than what's going through Instinet or one of the banking system, trading, where you see it directly. And so what happens is you're forcing a brokerage house. This is how a brokerage house normally works, which some people want to call stealing. It's not stealing. What happens is they're trying to facilitate execution for the public, okay, and they're trading, whatever size it is. And so if it's big size and it's a big client, they'll widen the bid and offer a little bit so that they can fill it. Now you may go as a market maker, you go into the system, you'll see that, and it'll just be sitting there. But if the market moves and they get filled, then they've executed the orders for their client, okay, or the public. And so what happens is that it's not stealing, it's not cheating, it's executing the order for them. And in the brokerage house, be it they try to cover it instantly, because they're there to make money on the execution. They're not trying to make profits. They're trying to make money on the execution. That we have an old saying on that side: fill and bill. That's it. In other words, every time a broker tries to play games and try to make profits, I guarantee you, 2 out of 3 times they lose money. They hate that. That means they give up the profits they made from the execution. And so their objective is to be as neutral as possible. And some people actually think that they think that they're market making in a system where it looks easy, and it's not. They're trying to disrupt the public order system. And they don't know it though, because there's market makers, and then you can be a market maker like Dukascopy's a market maker, or Dukascopy goes to Swiss Bank and gets it filled through a market making system. And then Swiss Bank is liable and is trying to cover the order. And so that's all that really comes down to. And so like I said, that physicist and his son had created Big Blue, the computer that played chess out at Carnegie Mellon. And they were totally convinced they had figured a brilliant way to make money in the options markets. But they were taking public last trades, and they weren't taking actual market making trades. And so they were delayed and this and that, you know. End result is that you need to move to the market maker level. You become a broker. And that takes, you know, X amount of capital and registrations and, you know, all that stuff. Sure, let's look at good morning, 47. Good morning. I hope that answers it. Oh, and I hate it when people say, oh, they're stealing money from us. It's like, no, they're facilitating execution. All they want to do is fill and bill you and not lose any money. That's all they want to do. Fill and bill. That is the name of the game. GBP JPY. Let's see where that is. GBP, right there. There it is. What are we doing in there today? Okay, that's interesting. So it's trying to dip down a little bit, just like the way the dollar cable is. Let me just show you dollar cable just for the fun of it real quick. Right there. Doing that same little dip. They're both moving in the same direction. Now let's go back to the GBP JPY. And let's see what else we see there that it's talking to us about. Well, it's in the weekly sell just like the cable also. See that? You can see the white line. Oh, can you see that? Yeah, you can. The white line is trying to come back up, but it has not happened yet. See, it started to do that a couple weeks ago. And it started to add an incline, but obviously it didn't even get through the time manifold, or the non-linear time manifold, either way. The yellow line. It didn't go through the yellow line. And so it's still showing a lot of weakness. Now that's interesting here. You know, went into the sell, was it right here off of this one? Put that in there. I guess it's the last time you talked about this with us. Oh no, that's the wrong spot. Let's get rid of that. Let's get rid of that one and put them in the right spot. So went into the buy. Where did it go into the buy? Did it go into the buy there? No, because that's, oh yeah, right there. Went into the buy there. Then it went back. Is that the sell there? No, right there is the sell. So this one right there is the sell. See that right there? Okay, let's put that in there. So then it went back into the sell, which was the winner chicken dinner. Right there. And then I guess Friday they gave it a nice spike up, and now it's trying to digest a little bit of it. But we're still in the weekly sell, so you're not, you know, the only thing you would have done is made sure you're not short anymore. You should have taken some profits off of the 3 days of opportunity here, or 2 days that is, and you should have been locked in here, and in good money management you would have had to stop somewhere around in this area here where you'd have been covered on Friday and not lose that monies there. What else can we say about what we're seeing here? You know, it's a good product. That's I'm sure I've probably said that half a dozen times. Look at the distance between the buys and the sells. It's nice. It's very consistent. You can see the weekly can trend for a while. Now that weekly buy was interesting in the sense that, you know, it joined in with this and it finally pushed it into the sell here. Wasn't much of a move, but you know, it was a winner, and that's all that counts, you know. So, oh, no problem, 47. Always glad to look at a product, and you never know, we might find a trade. You know what I mean? So that's it. That's the nuance of the 21st century. We're all proactive now instead of reactive. Whereas many of us who write books and talk history, you know, basically talk about how much money made in the reactive universe. But we're not in a reactive universe anymore, and they should write new books talking about how you have to be proactive, because you have to figure out where to trade, because no one's knocking on your front door or your office door and saying, hey, I'd like to buy some British pound yen. Yeah, right. Sold. So that's what that comes down to. And that would be market making. Now we're back to Alessa and Alan Tommy, back to market making again. No one's market making anymore. I mean, they've really restricted market making too in many ways. They've made it very hard for banks to make markets. They've made it very hard for brokers to make markets. In other words, the brokers are making markets, but it's not easy anymore because they've really removed. Back in the reactive universe, when exchanges were functional, there was a lot more reactive trading upstairs and downstairs. Okay, in other words, brokers like Goldman Sachs would lean on their clients' orders. They were market makers, so those orders barely made it to the trading floor, depending on what it was. Now, without the trading floors, the Federal Reserve has kind of removed a lot of that, what they call the desks. Like a desk that you sit in school. You'll read articles about how the desks have been closed in different brokerages and banks. They shut them down because they don't make money. And the idea of brokers there to make money, but not make money in trading, in execution. And that's where it all gets confusing, So, anyhow, let me move out of that genre, unless someone wants to know more. Then, let's see, let's look at Euro. You see Euro, now it's moving down today. Went into the buy yesterday? Yeah, Friday. It went into a buy too. And it's already trying to break down, but it's not really breaking down. Look at it. You can see the daily is holding up very firm. The weekly is in the minus, so you don't want to trade the long yesterday. In other words, you wouldn't get long that. You'd be just watching it knowing not to be short. Now you really wish you were short because it's back down to where it started from. But that's not the way we play around here unless you're trading binaries and options. When it comes to hard delta, you don't want to get stopped out. Like you get stopped out like there right now. Imagine you were long. You get stopped out, and then the thing goes back up by the end of the day, and you're like, what the heck? That's why we say, we want these things, these two things, the weekly and the daily coordinated together. It increases the odds 8.5 out of 10 times that it's going to be accurate in pure direction. How much, we don't know. But we do know that it's going to go up. And that means that you can make some money if you're long. And vice versa. We know when it goes in a sell that it's going to go down and you're going to make some money. And so that happens 8.5 out of 10 times. Da-da-da-da. All right, so there's the Euro. Now we've already looked at cable because of the GBP, JPY, and it's doing its thing there also. And then, let's see, let's go over to the Turkish lira and see what they look like this morning. Still in that sell for, I don't know, what, 7 days, 8 days? What is it? That's line 17, I'm sorry, 17. Let's highlight that. I'll show you what I mean there. So it's in a weekly buy on line 17, right there. And it's in a daily sell for 7 days. So basically it's kind of frozen itself there. Hey, JJ. Just have a question. No problem. About Forex. Are people really making money trading Forex? I would say this. Forex is probably the best market out there to trade in. That's pretty easily to say. It's a much more consistent. You'll notice a lot of the charts, they go into sells. They can last 4 or 5 days. Vice versa. They can go into buys 3 or 4 days. Or much more consistent. So currencies are a good tool. You have to use correct money management. What does money management mean? It means if you have $5,000 in a trading account, every trade cannot be margined out $5,000. You want to be margined out, say, $500. You want to be margined out 10% at most, to live to fight another day, that type of thing. And also maybe using binaries, maybe using options, maybe using a combination of the hard delta or the underlying Forex itself in the cash with a binary. In other words, there's a lot of different trading strategies to make money. And there's a lot of, and you can lose money just as easily if you're not using good trading strategies. And that's what practice and training and all that stuff is about. Because all the 100 millions of dollars are being made in stock, e.g. GameStop. Oh, yeah. Well, I think that's the Robinhood system and so forth. What they've done is they're doing tranches. That French word, tranche, a slice. So what happens, they allow, in that universe, what they're doing is they're allowing people to take $50 and buy some GameStop. Now the GameStop, I think, is trading at like $200 a share. So when you go to buy $50 worth, you might be buying, I don't know, like 1 share. and one share is $250 some odd dollars or 200 some odd dollars, but you're doing it with $50, and like something like Robinhood is lending you money. Now, that's why they had to close some of the trading for a little bit, because in other words, they didn't let customers buy or sell, because the brokerage house that clears them told them they had to put more money in, and they weren't allowed to trade until they did. And so they're leveraging, they're allowing people to leverage. So there's that's a whole long conversation. But is it good or bad? I say it's good, actually. I think it's good that people are able to invest in things like that, and distribute out that risk and so forth. So there's money being made wherever, but anybody, in the end result, people used to ask me, can you, how did they used to say it? Something about profits in, like, when trading soybeans or British pounds. People would say that to me when in the stock market. I said, you know what? Profits in IBM are just as easy to spend as profits in soybeans. Profit's a profit. So if you money manage correctly, it doesn't really matter what you're making money in. The more important factor is how you use the tools you're using and how much money you're using, and how not irresponsible. So in other words, you have 5,000 or 10,000 in an account, or 100,000. Don't buy a position for 100,000. Buy a position for 10,000 or 5,000, and make some money. Don't risk $100,000 trying to reach for the moon in 10 minutes. That type of thing. Does that make any sense to you? Let's see now. Let's see what Alan says. Alan says, Aussie dollar, there is a massive 75 option strategy later this week. Thursday, the size of the strike. Let's take a look at that, because I saw where I was kind of surprised. I think Aussie dollar is in a sell. Yeah, it's in a sell for 3 days. I thought that was curious. Right there. So it's going on a fourth day down, and they tried to pop it on Friday, and I thought that was interesting. Right there, we're in a weekly sell. I'm not sure what that's all. Oh, I know it is. Yeah, what did it do? It go into the. Now, what is that? Oh, I know what that is. And I don't think we're using that. Let me just go over here for a second and open something. Let me try something here. Where's it at? Open. What do we send out? This is the chart we send out. And that's the one I kind of pay attention to. And I might need to, I think I need to copy, that's cable. Yeah, I think I need to copy this one and put that over on the Dukascopy chart. I think I have that set up function that way. I think this is, we'll do that right now. So I copy that, there we are, and I close that, close workspace, there we are. And then we go to the Dukascopy chart. Oh, I know what it is. It's, let me just, I should have just looked at it. I bet I'm doing this. I bet that's a 5. I bet the bottom is a 5. I bet we're looking at the histogram of a 5. Yeah, that's what it is. So the 6 is the histogram. So we make that invisible and make that visible, like that. And make that the histogram. I think that's what it comes down to. Because the change of the volatility, that's why I did that. Let's try that again. Plot for histogram. There we go, that's better. Make that thickerish. There we are. Yeah, so that's what's going on there. Now, I guess, what is it? I don't know, something's wrong with this chart altogether. I gotta fix that chart. Look at it, there's no numbers anywhere. All the numbers got wiped out, and there's no lines, and we tried to fix this before. And I don't want to blow it up at the same time. So what we'll do is we'll fix that. I need to remember to do this on this particular page. I think what I did is I parked it. That's what I did. Didn't we have this issue and talk about this last week? That sounds familiar. There it is. Yeah, so that's what that is right there. And what we do is we fix this, make that invisible, and then make this one visible. That's what it comes down to. There it is. And that's how we're following it, because we've shifted. We're running a gas 3 line as the. I back tested it and looked, and it's the better of the. Let's see what's going on here. So the black line, what is that? That's. Oh wait a minute. I think I'm. Okay, cancel. So we got to do it here. So that's invisible. Oh, I see. And that should be the line. That's what it is. So this should be the line. This should be the histogram. There you go. That's what's going on. There we go. And so you can see here, it went into the buy there. And how many, what do we have on the fact check spreadsheet right now? That is line 12, right? So it's 5 and 3. 5 weeks in a sell. So that would be 1, 2, 3, 4, 5. Yeah, that's what we're running. And we're not using the plot 6 because the volatility has shifted in this. That's what it comes down to. We change our gas lines to the beta of the products. That's what it is. All right, now let's see. So so Alan is saying 75 strike, and then where are we at here? Okay, yeah. So it's parked on the 75 strike for like 3 days, isn't it? You know, it's there. Let's see, right there. It's been there for a little bit, hasn't it? So someone's built up a big options position, and the open interest is enormous at 75, and it's parked itself on it. And that you can see our work has done the same thing. It's parked itself, bouncing around the lines in there. So that makes sense there. Thank you, Alan. Alan likes to chase after the open interest in options to see where a product is going to park itself. That's good, which is a pro's direction. It's a very good heads up option direction. Very good job, Alan. Very good job. Thank you. Alan says, while the main cities are locked down, will be interesting. Oh, wait a minute. What did I miss there? See, I missed something there. Let's see. Did someone say something about cities? Okay, so now, oh, there's Titus. Hey, Titus. Oh, sure. I just want to answer LS. Let's see. So AUD dollar started up moment about 3 a.m. Friday, and then there wasn't a special news. May I ask what was the reason on your opinion? Which one's that? Which opinion was that? Why it jumped up? Just more buyers and sellers, maybe. Probably because of what Alan's saying. There's a big open interest drawing everybody to the 75 strike. So notice it ran up to, where was it? It ran up to 74.94. So they're parking themselves on that, knowing that that's where the action's going to be. China is really having problems, and if the media wasn't in love with communism and socialism, you'd hear it more. China is really having a lot of financial problems. They're enormous in debt. Their economy is sputtering because of what Mr. Trump did about not just handing them billions and hundreds of billions of dollars for free. And so, you know, the Democrats love the socialists, and they try to prop up socialist countries so that they can try to turn America socialist. But it doesn't seem to work in the end. So you see where they're rioting and or they're picketing or doing something in Cuba. And the Democrats in the United States are not saying a word about it. Anyway, okay, so that's there. I need to get over to Titus and show Titus gold. So let's throw gold in there. And there is gold. It's down today, right? Yeah. Let's give it a real quick refresh, too. But last I looked, and silver is doing the same thing. They're both getting pushed down, you know. Why was the main cities are in lockdown will be interesting. Now, what main cities are they? The China ones? If it's the China ones, it's because they're really worried about unrest. There was a couple really solid articles coming out. They came out over the last couple of days about that. Was it President X? President Xi? What did he say? He said, you know, he says heaven's destiny. Well, heaven's destiny seems to be falling apart, and they're in a lot of debt, and they have a lot of problems. And the average income is around 10,000. You know, it's not as high as like South Korea and America. And I think America's average income is something like 500% more than China. And so it's trying to be the #1 economy in the world. And you can't be the #1 economy in the world if you can't get your population earning more money. I mean, I think the Commonwealth overall, with Canada, England, you know, Great Britain, Australia, you know, New Zealand, and a few of the other countries, and then you take the rest of the Commonwealth, like India and Belize and Nigeria and Kenya and so forth and South Africa, and you take all of them and put them together. I think the average income is around 13,000, maybe 14,000 when you smooth it out, whereas China, it's under 10,000, and so they're having problems. It had something to do with the one baby thing, It was that really hurt their economy in the future. And it takes. I was reading a statistic about that, and it's going to take 30 some odd years to straighten it out. It's not going to be fixed. So now they have a policy of 3 babies a family, but it's going to take 30 years to get to that center point again. So there's some real problems there. Let's see. So there's gold. How's that, Titus? Let me see if I can come up with something to say about that. It's in daily sell, but going sideways. You know what? I wish Alan Tommy was looking at open interest on gold. Wonder what the the largest option volatility. Let's try this in English. Alan, if you get a chance, take a look and see what the largest option open interest is in gold. Wouldn't surprise me if it's like 1,800 for the next big expiration. Whatever expiration it is, if it's 2 weeks, 1 week, whatever. Take a look and see if you can spot what the largest open interest is. It wouldn't surprise me if it's parked in the 1775 to 18 area. That would make a lot of sense. And you can see maybe why they seem to park this product in the 75s. Let's see, COVID Sydney. Oh, yeah, the COVID thing is such a political crazy. It doesn't, it's so hard to wrap your head around something that's not very scientific. See, Alan says, coincidence in China, main shipping yards are in lockdown. Yeah, they're having a lot of problems. There's Middle Age. Hey, Middle Age. Yep, thank you, Alan. I appreciate that. Middle Age says, you think a $50 day in gold, a $1.50 day in silver would move that weekly quant? Let's see. Yeah, I would say so. Yeah, definitely. Yeah, definitely. Especially because of the sideways action we're having here. Even probably a $25 or a $40 one would probably. I wish my trade station, because it has a separate server, gives me the opportunity to put theoretical prices in and look at where my math would go. But on the multi-chart, I don't have that, which is fine with me. That's just more legwork for me. So, that's the way that rolls. Let's see. Titus, I hope we answered your question, and I think Alan might answer more of it when we get to see what the open interest was, because that could be very interesting. That might tell us some real insight to why they parked the gold in the anywhere from the 1775 to the, or you can see it went down to 50 at one point in this sell, but basically it's parked itself around the $18 area. I'm sorry, $1,800 area. So it wouldn't surprise me if there's some big open interest in the options in that region. That would not surprise me at all. All right, that was this last sip of my coffee. My coffee is gone. All right, am I answering all questions? If not, just throw a pillow at me or something. Throw a scream on the chat line. Yeah, I don't. Unfortunately, this COVID thing has been such a fiasco. It's been such a joke. It's it's really odd about the whole thing. No one talks about how it's a cure for cancer and a cure for heart disease, because cancer patients have diminished by 90%, and heart disease patients have diminished by 90%. And so you would think they would talk about that. First time here. Oh, in the JJ's first time here in the webinar? Oh, okay, cool. I hope we answered it. $3 billion, mostly shorts. Interesting. Interesting. So it's short. So they're short the calls. Wonder how much that is the central bank. So we can't see how much the central banks, like the Fed, is selling the hard gold short in the futures market. But you're saying that the open interest on the options is on the short side at the $18 area, $1,800 area. Okay. Yeah, that's another one, Titus. They've found a cure for the flu. It's called COVID-19. I know. They talk about, people in the media here in the States like to say, oh, and we lost, 600,000 people, that type of thing from COVID. But for some reason, the death rate for 2020 is lower than 2019. So overall, less people died in 2020 than they did in 19. And would you believe 2018 death rate was even higher than 2020? So the average is dropping for the last couple of years. So something is brewing there. Let's put it this way, scientifically, when you look at the math, it doesn't match what the media is talking about, that's for sure. Because they should be also talking about how COVID cures heart disease and cancer. Because, it's not like it's 10% difference, it's a 90% difference. It's a dramatic drop in heart disease and cancer. So something's wrong there. They've died from cancer or they died from COVID. It's one or the other. But they don't die from both of it. And flu. Now flu, the normal amount of people dying from flu in a given year is like 30,000, something like that. So, I don't know. You figure it. You judge. I've already told you my opinion. I don't trust any of it. It's not scientific enough for me. Life insurance make a lot of money. I bet they do. Because they're not paying off on other things like cancer, right? They're calling it something else. Right? Exactly. That's a bummer, huh? Yeah, I hear you. I hear you. All right. Let's see. Now, where do we go from here? There we are. See, Alan says massive. Oh yeah. Okay. So we saw that. All right. So no. Okay, I already saw that. Robin says they have a cure for cancer, likely being hidden from us. Right. I agree, Robin. And they're not sharing. Exactly. They're not sharing. Massive increases in the dollar long options as gold moves towards the dollar. Yeah, that makes sense. COVID is the new baby, so they will talk about it and ride it as best as they can till something new comes up. Exactly, Jay. Exactly. I agree. It's big dollars. That's right. Trump was speaking at his New Jersey home up at Bedminster. I guess it was Wednesday of last week. And he said, remember how all the, like Google and Facebook and Twitter blocked him, talking about that pill that for 3 cents, that pill people use when they leave the country to protect themselves from different flus and so forth. And Trump always has had the family taking it for, whenever they're traveling, they take it automatically. He says, but when you make a pill for 3 to 5 cents compared to a pill that goes for like $30 and $50, guess which one everybody wants you to talk about? The $30 and $50 one. But when you tell everybody about the 3 cent and 5 cent one, they tell you that you're crazy and you're lying. Oh, let's check that out. Alan says that the South African Rand. Let's see what's going on there. Usually we roam over to the South African Rand to take a look and see what's going on. Let's see, let's go to there. Usually that's gone kind of awry to the metals market of late too. Something's brewing there. You know that, Alan? There's something brewing because the South African Rand has drifted away from following the pattern of the metals, whereas we were watching it for a few months where it was marching along perfectly. So you got this. In other words, when it's going up, the metals are going down, so that's fine. That's marching along correctly. But these daily things seem to be a little off. Now, today it's okay because you can see it's up and gold is down and silver is down. Let me just go there and show you. So there is gold No, that's Java. That's coffee. Where's that? Right here. There it is. And so gold is down. That makes sense. So the South African rand is moving back into rhythm again. And then, and I guess you could say to some extent it has stayed there. And you can see silver now, which this morning was pushing down much harder, has flattened out. So this morning it was down as low as 26.17, and right now it's trading at I'm sorry, 25.93. So it was down at 25.93, and it's moved up 34 cents. 34 cents? Yeah, 34 cents. And so now it's back up to 26.18. So no, 25 cents. So it's moved up 25 cents. So that you can see the strength coming back into it. Now we go back to the South African rand. And like I said, it's doing the thing right. It's going up. It started going up here. It's still in the weekly sell until I guess it was right here. Put that in there too. Right there. So I went into the weekly buy there. And went into the daily buy right here. I guess we haven't looked at it enough lately or something. I'm not sure we'll go there. See, that was that there, so no, it's this one right there. There's your daily buy. So it told you not to be short anymore from this move here. See, it was really trending nice. The metals market was following it really nice, and then it got a little jumpy, and so it started to go up here. And then let's put J4X up, so we can put the two of them together. We'll put gold in there, so you can see both of them at the same time. There's right there. Yeah, so back in, where was that? That was, oh, there it is. Okay, so let me just see what week that is. So it started to turn up on the 30th, right? Yeah, so the end of the month. So it started to turn up at the end of the month, right there. And then this is, let's see where the 30th is. That's the, let's see. Okay, so there's the 30th, like, no, wait a minute, 30th is right there, right? Yeah, so the 30th is this week here. So that's what that is. So I think we're looking at that move right there on the J4X from that low. And then I guess if we scrunch the J4X up, let's see what's going on. The Hinky Ashki makes things a little wacko at times. Okay, so there's the 28th. Where's the 28th on here? There, yeah, that's the 28th right there. Okay. So we're just looking at that. Okay, yeah, so it's the inverse, right, exactly. All right, so end result is that I think that it's smoothing out again. It got a little odd there for a little bit. I mean, it made sense. It was going up, and in gold, it should be going down. And on our Hinky Ash sheet, they were averaging it, making it look like it was much more aggressive. Oh no, my swimming pool is closed due to maintenance. All right, so I think that's where we are at the moment when it comes to understanding the South African rand to the metals market there. Titus from Australia. My sister is a doctor. Ah, okay. Doc, are you an educator? No. Well, maybe back in the 70s. Back in the 70s, early 70s, yeah. But not since they legalized options. Where do you live, Alan? Can you? I say Alan is in Australia. Okay, excellent. Okay, so it's very late right now for Alan. It's like 2 in the morning. Doc, are you an educator? Traders. I've educated my traders. I've had traders, so I've trained traders, pro trader, market makers. I've trained market makers. That's it. That's the best way of describing it. Not like retail amateurs, types, but professionals, where they work at it 8 hours or 6 hours a day, that type of thing. Does that help any? And then Robin and I now we have a web service, but doing Dukascopy for like 9 years now. Because they don't block when I say the Federal Reserve. You know, for a while in the States, if you said anything I say nowadays, 9 years ago, they told you that you were crazy. They told you're nuts. 12 years ago too. They would say, "Oh no, that's not real. That's fake." Yeah, even back then they would say that stuff. It was impossible for the broad public to buy it from the drugstores because discreet from the States. Yeah, I think if you took that 3 or 5 cent pill, does pretty good too. You know, and the end result, you know, it is some type of political shenanigans going on with the whole thing. And it could be for the positive, who knows? But right now, as far as I can tell, it doesn't seem to be anything more than just political shenanigans. If we would have like a like, you know, they had that Spanish flu in 2000, or was it the 19, right after World War I, you know, right around the war, the Spanish flu, and like something like 18 million people died, and there was this big increase in deaths from the flu. It'd be one thing, but overall, world deaths are flat. You know, so something's wrong there. You know, I mean, it'd be different. Imagine if they had like 3 million more deaths this year than last year, or 5 million more. It would be easier to take serious scientifically. But when you have less deaths, what are they talking about? They've just changed the categories. That's all they're doing. Millie says, coffee up in the morning. Yeah, I was wondering if we were going to see I left it up too. Here it is right there. Let's give it a quick refresh and see if they're reflecting that. That's Friday stuff. And that's wrong. We need to get rid of that red line. I think that's supposed to be green. See that? It closed in a buy. Somehow or another it's green. It's red. It's supposed to be green. See that there on Friday? Did I send that out red? I gotta check that now. We gotta check that now. I don't want anybody thinking that's red. That's following it. Where's it at? Right here. Let's see what I sent out.
Robin R.
Yeah, see, that's wrong. We gotta send you a new one. Okay. Let's see what the Robin says. There's the phone. Hello. No, are you down? Oh, really? Oh, let me finish the webinar. I'll call you right back. Okie dokie. So middle age, see that? It's a buy. Now what? That's what went out. That's wrong. It's supposed to be a green. Let's go to it live. Matter of fact, we'll stay on until it goes live. This way you can see what it does in live trading. Middle age follows coffee, and we only can get the ETF. Now I just have to figure out where I parked that. Just had it somewhere a few seconds ago. Is that it? No, that's not it. Here it is right there. There it is. Let's see what they do over the next 20 seconds or 30 seconds, something like that. What do we got? We got 40, almost 45 seconds or something like that. And we'll see how that goes. What they do, Alan, they blocked you from saying something. Is that YouTube Australia blocking you? Yeah, so middle age, that's supposed to be a green line, not a red line. I guess you probably looked at that and knew better right off. So we'll see how that plays out. So anyway, traders, we're going to call it a day. We're going to stay on live just to see how this thing opens up in the New York market in another 20 seconds. Everybody have a safe and smart trading day. Nope. Nope, what? I did not see sent message for moderation. Huh. So somehow, is that how that happens? Be honest, they throw something out there. Who knows anymore with the way the three majors are. I guess that's what we call them now. Twitter, Facebook, and what's the other one? Google, which owns YouTube, right? So, you know, they have some policies. All right, this is Doc from North America. We got to come up with a title too. Is this opened yet? Still hasn't opened. So, happy trails to you until we meet again, which is tomorrow. Come on, update. What is up with this thing? Happy trails to you, to all our Dukascopy trading friends. Where is it? I'm checking now to see what the quotes are. Why is it not reflecting on the chart yet? Come on, guys. There it is. Okay. So there's a symbol. Something's going on with it. I guess there must be a gap up. Oh, it's up 67 cents. That's why. So they're having a hard time opening it at the moment. That's that market making thing. Because right now they're quoting it at 43.05 with an 89 bid. It's 16 cents wide on the bid offer. See, that's, and they're reflecting a 90 trade actually. Now why isn't it not showing up on the chart? Let me just double check it real quick. You can now look at that. Look at the weekly. The weekly is backed off starting off. What is the issue here? Let's just go regular market. Let's go to default and see what happens there. There we go. Now it's gapped up, but look at the weekly. There's a warning there for you on the weekly. I know I sang already. Usually I'm gone. I don't want to. I want middle age to see this. Titus, no problem. Alan, no problem. Yeah, check that out. Middle age. That thing is the weekly's breaking down on it. This could be like at A. Then the B, notice that these two tops or three tops in here really stalled out. You know, normally after a third breakout like that, you know, usually the move is supposed to be on the upside. So the B, R.N. Elliott would have been talking about the B should be like a breakout and new highs. But my math is picking up some weakness in here today. I think we got to watch this really close. Talk to Robin. I think we'll just send you a couple out this week during the middle of the trading day, just to protect you. Yeah, we'll do that if we see a shift in the weeklies. But just know right off starting the week off pretty extremely down. Now last time it did that, it did go down. It dropped about $4.50, $5 overall over a 3-week period. So watch out. All right. No problem. This is Doc again from North America saying catch you on Tuesday. And Janos, thank you very much for checking out for some of the viewers. All right, this is Doc saying ta-ta for now. Aloha. I did sing. Happy trails.